Hi everyone, I'm Chris Tipper, Chief Economist and Strategist for the Ainslie Group, and welcome to Ainslie Insights for another week, starting with our precious metals update. This week has been marked by significant activity, influenced by economic indicators, geopolitical factors, and shifts in investor sentiment. Our objective today is to deliver a clear and insightful analysis, valuable to both seasoned investors and those who are new to precious metals. This presentation is brought to you by Ainslie.com.au, the home of Ainslie Bullion, Ainslie Crypto, Ainslie Wealth, and the Gold and Silver Standard. Be sure to have a look. Getting started with gold, it is a metal that is widely recognised for its enduring value. Over the past week, gold prices exhibited some level of volatility. On the 26th of May, the price stood at 5,259 Aussie dollars. It was supported by proposed US tariff increases and a declining US dollar. A midweek adjustment followed after a US court ruling that nullified these tariffs, bringing prices back up to 5,114 Aussie. By the 30th of May, prices rose to 5,163 due to weaker than anticipated US employment data, before stabilising at 5,113 today, a year-to-date gain exceeding 25%. Several elements underpin gold's performance. Central banks, notably in China and other emerging economies, have bolstered demand, with purchases surpassing 1,000 tonnes in 2024. China's resumption of gold acquisitions in November of last year reinforces its strategic importance amid global financial uncertainties, such as the exclusion of the Russian ruble from the international systems. Moreover, apprehensions regarding US fiscal deficits and a potentially weakening US dollar have enhanced gold's role as a safeguard against inflation and currency fluctuations. For Australian investors, with the Aussie dollar sitting at around 64 US cents, this amplifies gold's appeal should the US dollar depreciate further. Legislative advancements also merit some attention. Florida's HB 99 now permits gold and silver as legal tender for transactions, including tax obligations, exempting such purchases from sales tax. This development signals a broader acknowledgement of precious metals value, potentially influencing demand if replicated elsewhere. Speculation about a US return to the gold standard has also surfaced, though it remains highly improbable. Such conversations are often fueled by remarks from President Trump, suggesting that revaluing US gold reserves could offer some fiscal advantages. It is largely theoretical, at least for now. While India's demand has moderated due to elevated prices and the end of the wedding season, global investment interests persist. Projections indicate gold may reach 5,200 Aussie by the end of the quarter, with a potential rise to 5,500 within the next year. Investors should remain attentive to economic reports and geopolitical shifts, which may introduce temporary fluctuations. Gold's outlook is favourable, driven by central bank acquisitions, economic uncertainties, and its established role as a reliable asset. Next, we examine silver, currently priced at $51.26 Aussie. This week, silver regained this level, propelled by subdued US jobs data that reinforced its safe haven status. Beyond this, silver's industrial applications distinguish it as a versatile commodity. Bank of America anticipates silver could climb to $62.50 by late 2025 or early 2026, citing its dual utility. Last year, industrial demand, which spans electronics, solar energy, and automotive sectors, reached unprecedented levels, perpetuating a market deficit for the fourth consecutive year. This shortfall is expected to persist for the rest of 2025 and beyond. The recent US court decision to overturn tariff proposals has favoured silver, facilitating international trade essential to its industrial use, which constitutes over half of global consumption. Concurrently, China's initiative to refine its commodities market, including proposals to accept foreign exchange as collateral on the Shanghai Futures Exchange, may enhance liquidity and draw international investors. Supply challenges further bolster silver's prospects. Reports from a major Chinese silver miner and a temporary suspension of silver product deliveries by the Perth Mint highlight constrained availability, potentially elevating prices. While short-term technical assessments suggest possible price corrections, silver's long-term potential remains robust, supported by its safe haven appeal and industrial demand. For Australian investors, silver at the current price offers a promising opportunity with substantial growth prospects. Lastly, we address platinum, currently valued at 1,645 Aussie. This week, platinum achieved a 2-year peak of 1,713 before settling at its present level, reflecting a year-to-date increase of approximately 17%. This performance stems from robust demand and limited supply. China has significantly influenced platinum's demand, particularly in jewellery and investment. In the first quarter of this year, global jewellery demand rose by 9%, while investment in small platinum bars in China surged by 140%. Elevated gold prices have positioned platinum as a cost-effective alternative, appealing to both consumers and jewellers seeking higher margins. Platinum's industrial uses, including automotive catalysts and medical applications, further sustain its demand. Although electric vehicles present a future challenge, the gradual transition ensures platinum's relevance in conventional and hybrid vehicles for the foreseeable term. Supply constraints are pronounced, however, with mining output dropping 13% in the first quarter of this year, resulting in a deficit of 816,000 ounces, the largest in 6 years. Projections for 2025 estimate a deficit of 966,000 ounces, which is supply expecting to decline by 4%. Regulatory hurdles in South Africa may exacerbate this scarcity. Analysts predict platinum could reach 1,875 Aussie dollars in the near future, reflecting growing market optimism. Despite variables such as Johnson Matthey's divestiture of its Catalyst Technologies business, platinum's trajectory appears upward. To summarise, the precious metals market continues to evolve, with each metal shaped by distinct influences. Gold remains a steadfast safe haven, supported by central bank activity and economic concerns. Silver stands out for its dual role, promising growth through industrial and investment demand. Platinum emerges as a compelling option, driven by Chinese demand and supply limitations. For Australian investors, with the Aussie dollar exchange rate at about 64 cents, it enhances the attractiveness of these metals as a buffer against global volatility. Staying informed remains paramount, however, given the potential for economic and geopolitical developments to affect short-term trends. What do you think? Which precious metal are you most bullish on for the next quarter? Share your insights in the comments below. Until next week, good luck in the markets and be sure to visit ainslie.com.au for the latest news and updates.